Yeah, we are live. Can you hear me?
Yep, I can hear you, brother.
Perfect. All right, what is going on, everybody? My name is Rashon Howard, and you are watching Conversations with Rashon. Super excited to be here with my guy George. Man, tell the crowd a little bit about who you are and what you do, man.
So thanks so much for having me, bro. My name is George Cephus. I am the founder of Survival to Success, which is a nonprofit that focuses on healing the Black community mentally, spiritually, and emotionally. I am also an author as well, author of an ebook called Survival to Success, where I talk about the steps that we need to take within ourselves in order to move the Black community forward. I'm also the author of a journal called 50 Questions of Healing, which comprises of 50 questions and 50 quotes to help people get a better understanding of who they are, their trauma, and how that's affected them, and how to heal and grow from that. So yeah, man.
Awesome,
Yeah.
man. I'm glad to have you. And listen, guys, if you are watching, thank you so much for watching, for joining us today with Conversations with Rashawn, which is every Friday at 2 p.m. We are going to have a topic no matter where we are and what we're doing. As you guys can probably tell, I'm not in the friendly confines of my home studio as I usually am. But hit that subscribe button as you see right behind me. Make sure you hit the notification. We have some great things coming to you. We got our we're premiering Connected Cooking October 7th at 6:30, and I'm super excited about it. But today we are here to talk what life insurance. Yep, we're here to talk about life insurance, and George is one of our members of the Grow Network. Again, if you are a part of the Grow Network, you have the opportunity to come on with Conversations with Rashawn and extra pointed conversations around finance. You want to grow, which is gain realistic opportunities for wealth. So join by going to the website right now, www.experienceshine.com. Make sure you register for our 3-day wealth challenge next week and then upgrade to the Grow Network and get multitude of different benefits, resources, education, and knowledge so that way you too can gain generational wealth for your family. But George, again, I'm happy to have you, man. And this is a very important topic in today's climate, right? There's a lot happening in 2020, and I seem like I'm consistently saying that at the beginning of the year. But the reality is that's true, right? And in our community, in any community, we want to make sure that we're fully prepared for the inevitable because it is going to happen. We just don't want it to happen as fast as it's been happening in some of our families, right? But we also want to make sure that we have the financial stability to ensure that something like that doesn't hamper those who are still living on this earth. So I know me and you had a discussion, and there were some questions that you had. But let's get started, man. What is it that you know about life insurance, and what is it that you're looking to learn about life insurance? Talk to me.
So I met Rashawn about a couple years ago, and I was telling him I actually used to have my insurance license for a bit. I had it for a couple years, and I was always taught that term was the best way to go in regards to life insurance. I was taught that whole life insurance was a ripoff. I was taught that that it's better to save your money, save your money with term life insurance and invest the difference. And when I came across Rashawn, he sat down as my financial advisor, and we had that conversation around. He started talking to me about whole life. I said, "What?" I was like, "What? Whole life? This guy's tripping." so and but I listened to what he was saying. I was open minded, and he was explaining to me some of the benefits of whole life insurance that a lot of us may not necessarily know of. And I wanted to definitely have some more conversations around that about the difference between the two and how they can benefit who in different situations. But even before you get to the life insurance, I feel like there's a mindset, around our community where a lot of us don't even have those type of conversations around money and around
Yes.
life insurance. So I want to ask you first, what do you feel like are the steps that we need to take within our community in order to kind of start to have more conversations, or do you feel like there's steps that need to come before life insurance in our community?
So your question is say repeat that one more time. I'm sorry. Where
Yeah,
I'm
so
at, there was a dog barking.
do you think do you think that there are some steps that need to happen before we start to have the conversation of life insurance with the people in our community?
Oh, definitely, because that's a conversation. I mean, finance in general, right, is a hard conversation to have in our community. We have been trained, for lack of a better term, to hold that near and dear to our heart. And everything that's going on with our finances is what's going on with our finances, and that's it. And so the steps that needs to happen before we actually have the discussion is we have to feel the temperature of our family, right? We have to see if they're even ready to have that discussion, because we can talk about it. We can say that it's important. But the issue is, if we don't really understand the importance behind it, how can we then move forward with the action of doing what needs to be done to protect our family? So the first step is testing the temperature of our family members. Are they ready to have that conversation? Is step number one. And then step number two, if they are ready to have the conversation, is ensure that you look for the proper financial professional. This is one of the biggest steps, because anybody can get licensed and sell you life insurance. The wrong type of life. No offense, I'm not talking about that was not pointed towards you, my brother. That was not. I actually had no idea. I had no idea. That was not pointed towards you. But the wrong type of life insurance can actually set your family back versus setting your family forward. And we talked about that yesterday on Facebook with my special conversation with Rashon, with my friend Josh Mannings. And I'm going to continue to have that dialogue and understanding, because the good thing with you, George, now that I know your license, you have someone like me who I can take you under my wing to ensure that you're giving the proper holistic advice when it comes to selling life insurance. Because I know for you, you're looking for additional streams of income. And I'm glad you took that step to do that, because it can be a great, fruitful career for you. I just, as your friend, will do everything I can to ensure that you're given the proper advice. Because unfortunately, there are a lot of people that are out there that get licensed and they look at the opportunity that it is to make additional money, and they don't take the opportunity to learn the actual industry, to learn the actual product, to learn how it actually fits into someone's financial plan or to a family's financial dynamics, and they sell what they think is best for them, but it may not really go with their goals, objectives, or needs at the time, right? So the next step is really identifying the proper financial professional and having a discussion holistically about what needs to be protected and how it needs to be protected. Hopefully that answers your question.
Yeah, definitely. And you touched on something important. Because for myself, I don't have my license anymore. I used to have it. But one of the reasons why I stopped working in that industry was because I realized that that was not necessarily my forte, and there was still a lot that I had to learn in that area before I could necessarily help anybody with their finances. Like I have to help
Yes.
my own financial situation before I can help somebody else. And I feel like that's another struggle within our community, is acknowledging when we need help. And
Yes.
I could have easily said, oh, I don't need to sit down with Rashon. I got my insurance license already. I'm good. I already talked to people about it. But nah, like I knew that my knowledge of finances was not where I wanted it to be. So I had to make
Hmm.
a decision, let me sit down with somebody else and see what it is that they know. Right. And so I feel like a lot of times, like that's one thing in our community, is that we really have to acknowledge, when we need help with our finances. If you never had anybody teach you about finances before, those weren't the type of conversation that you and your family had, then you should not be handling your finances on
Ex-
your own. You should have somebody
exactly.
expert such as yourself to sit down and help you with your finances, you know? So what do you feel like are the steps that we need to take financially, like in order to get prepared to have life insurance? Because
That
it
is,
seems like,
go ahead.
yeah, go ahead.
Now I was going to say that's an excellent question, George. The first things first, cash flow. You know, I say cash rules everything around me. No, it's cash flow rules everything around me in your relationship with cash flow. You guys will hear me say this over and over and over again for the next 50 or 60 years or however long I'm on this earth. Your relationship with finance is the most important thing. And there's two things that control your relationship. It's the money that you're bringing in and the money that's going out. And how that correlates with the decisions that you're making based off of those two things. How much money do you have coming in? What type of revenue do you have? What's your income stream or income streams? And then what does your spending habits look like? So step one is identifying how much money do you actually have coming in the household. Step two is then identifying how much money do you actually have going out of the household. And then what's the difference? Am I negative after that? Am I positive? Or some people might say, am I green? Am I in the black? Or am I in the red? Right? So once I identify that, if I'm in the red, then now I got to go back and look at my expenses and say, okay, where am I overspending or am I overspending? And if the answer is no, I'm not overspending, then now I need to, again, relationship, right? Tug and pull. Then now I need to look at my income stream and say, how do I make more money? Once you identify that, then you need to sit with the financial professional and do a protection planning analysis. And based off that protection plan analysis, you'll be able to identify how much life insurance you need to protect yourself, your family, and your assets. For some people, that number may be alarming. And then you hear the saying, man, I'm going to be worth more dead than alive. But what that analysis actually shows you is no, your life is worth more than anything. And there's no amount of money that can replace your value to your family, even if you are prepared. So that's the third thing that you do is a protection plan analysis. Once you've identified exactly what you have coming in, exactly what you have going out, exactly what you need to protect, then you need to create an actual budget of what you can afford to protect right now. Because I can promise you 95% of the people who sit and actually do a protection plan analysis cannot fully cover the protection planning gap right away. It's something that you work toward, right? But you start somewhere. So now that I know where my money is, I know how much I can spend on this need. And then now it's time to go shopping for the best rate based off of my need. Does that make sense?
Yep,
So how
definitely.
much money do I have? One, how much money do I spend? Two, how much do I need to protect myself, my family, and my assets? Three, well, I'm sorry, no, three is fine. Talk to a professional and do the protection analysis, which is four. And five, identify how much you can afford to cover right now. Does that answer your question?
Yep, definitely. And so once you go through that plan, right, and you figure out that, let's just say you don't have a lot of money left over to for life insurance, right? Like I want to get into now like when you should have term life insurance and when you should have whole life insurance. You know what I mean? So can you walk us through, what type of policies work best for certain people?
Definitely. And I'll use myself as an example. Um, if you read the blog, hopefully you did, go to www.experienceshine.com and read this week's blog on life insurance. But what we talked about was that, like George said, there's only two types of life insurance. There's different flavors, but there's only two types. You have whole life and you have term life. and they all have different needs behind it. So to answer your question, George, using myself as an example, I don't have any kids yet, but I want kids. I have a house. I plan on eventually getting married, finding the right, finding a spouse, getting married, having kids, starting a family. So I'm building my insurance plan based off of the life that I want to have in the future. Because one thing about life insurance, term or whole life, it's as expensive as your age and your health. What does that mean? The younger you are, the least expensive it is. The older you are, the more expensive it is. So if I know what my future goals is for life, I'm never going to be as young as I am today, because a minute ago, I was younger than I am right now. So for me, I know that I want to have children, so I need to cover my income. I have a house, so you want to cover if there's a mortgage on a home, 15, 30-year mortgage, right? So you want to cover that expense. And then if you want to leave money to pay for your children's education, those three things generally, especially in my life, you can get term for, because you're only going to need to cover that for a period of time if you're not here, right? So if I were to have a little one, if I had a 1-year-old running around, and if I was married right now, I would need my house, my income, and my child's education covered in case I died tomorrow. But when they turn 21, I don't need to cover their income. I don't need to cover their education anymore. When my mortgage is up, I don't need to cover my mortgage anymore. When I retire, I no longer need to cover my income because my wife is going to get my pension, my 401k, my IRA, the additional, and my Social Security, whatever it is. So those are things that I only need for a term period. So in that case, I get term insurance because I only need it for a term. Make sense? You get
Perfect.
whole life to cover things like final expenses, because one thing is guaranteed: we definitely gonna die. We just don't know when. So our family gonna need money to bury us. Our family gonna need money to pay any private debt that we leave behind. And if you're anything like me, you want to leave wealth behind for your children to be able to multiply. And you want to leave that behind whether they're 21, 50, or 70 when you die. You want to have that type of coverage for your whole life, because no matter when you die, you want to make sure that that gets transferred over to your children or your grandchildren. Hence, whole life insurance. Here's a major difference between the two. Give me one. I don't even know how to cut this off. I don't even know how to cut off when I got Mac everything, so when someone FaceTime me, it just calls me everywhere. Uh, so here's the major difference between the two. Term life is usually cheaper, one, because you only have it for a period of time and you get it hoping that you never have to use it. Whole life, they know you're going to have to use it. So, of course, they're going to charge you for that. But whole life, you can build what's called cash value inside of the policy. So, when you're building cash value inside of the policy, a portion of your premium is going directly back to you, but within the policy. So some people also get whole life, not to cover death or to cover wealth transfer, but as an additional savings vehicle for down the line. So that's why you really want to make sure you go to the right financial professional. It's because you have different goals, objectives, responsibilities, and needs than I have. And I can sell you something on a general basis, but it might not be specific to what your customized plan needs to be. Does that make sense?
Yeah.
So hopefully that answered your question.
Yeah, definitely. And so you brought up something important, and this is where like the different, type of viewpoints and the different myths start to come about in regards to life insurance, whole life versus term. And one of those things is that cash value. You know what I mean?
Yes.
Especially like somebody like myself who I was in an environment who was always taught that that was a ripoff. but you showed me a way in which it can actually be an investment. You know what I mean? And so, can you kind of explain um, when, how to properly use a whole life insurance policy? Because I I know there are some policies in which when you die, right, you either get the cash value or the whatever the worth, the whatever the value of the policy is, whichever one is greater, and
Yep.
then the insurance company keeps the other, which is why
Yep.
I was always taught that it was a ripoff. So how do you find a proper insurance policy to kind of avoid that kind of avoid that, you know what I mean? Like, how,
That's a
what's
great
the best
question.
way to use a whole life insurance policy?
That's a great question. And again, I'm gonna go back to making sure that you speak to the right financial professional. Of course, I want you to speak to me, but I'm fully licensed and I'm registered with FINRA and the SEC, and I can't publicly solicit or give a testimonial. So I can't sit here on this public forum and say, call me, email me, text me, I'm your guy. But what I will say is you want to make sure you sit with the right financial professional who has your needs in mind, who has a fiduciary responsibility to ensure that you put the client's interest first and not their interest, their pockets, their revenue, their commission first. Because again, there's so many different flavors of whole life, of term life, but we're talking about whole life. And there's so many different benefits. There's so many different riders. There's so many different ways, George, I can design a whole life policy to work for you. And so my answer to your question is it's all based on how it's designed. In order for you to be able to take advantage of a policy and the cash flow of a policy while you're still alive, you want you want to take less of a death benefit, so that way more of your premium is going towards the cash value of bucket versus paying for the cost of
Hold
insurance.
on,
Because go ahead.
run that one more time. One more time.
Yes.
One more time.
So I'm going to start it this way. You have a premium. You
Yeah,
have $100 premium that you're paying for life insurance
yeah.
for a $50,000 death benefit,
Hmm.
right? What you don't see in insurance policies is there are administrative fees, there's mortality fees, there's fees of actually having the contract, and then there's the cost of insurance that's what the premium is. But after all of that is paid, there's a portion of that premium that goes into a bucket. That's your cash value. Okay. There's a way to set up your policy where you have more cash value going in versus paying for the cost of insurance. How do you do that? You take that same $100 that you're paying per month and you have a $25,000 death benefit versus a $50,000 death benefit. So the cost of insurance is less because you're not covered for as much, but you're still paying the same amount to the insurance company. So naturally, more money will go to the cash value bucket. Does that make sense?
Yep. So
So it's
let me
all in
try to
design.
simplify that. Simplify that for some of the people watching, right? So basically, what you're saying is, um, if you have a $50,000 policy, right, and you're paying $100 a month for that $50,000 policy, right? You lessen the death benefit to 25,000, but you continue to pay $100 per month. So that way,
Yep.
the extra money, rather than it going to the paying the death for the policy, is now going to the cash value, so that your cash value is building quicker, right?
Yes. I'm gonna break it down even. I'm gonna break it down even more for you, right? You have you have a T-shirt, okay? You can get a large T-shirt or you can get a medium T-shirt, okay? You're going to pay a flat after all the cost of the T-shirt is gone. There's going to be extra money. The extra money for the T-shirt is going to go into a separate savings. It
Mm.
says internet unstable. Can you hear me?
Yeah, I can hear you.
I lost you, George. Is that me? Or
But I can hear you fine.
Sorry, my internet was a little low. Am I back? You got me?
Yep, I can hear you.
Okay, what was the last thing you heard me say?
You were saying that if you bought a T-shirt and there's gonna be extra money left over after you buy
Got you. So you have a T-shirt, and you're going to pay this flat fee for a T-shirt. So let's just say you're going to pay $10 for this T-shirt, right?
Right.
A medium costs less than a large. Any additional money that you have left over after the cost of the T-shirt is going to go into a savings account.
Right.
So a medium T-shirt costs $5. A large T-shirt costs $7, but you're still going to pay $10.
Mm.
If you get a large T-shirt, $3 is going into your savings account. But if you get a medium T-shirt, $5 is going into your savings account. Does that make sense?
Yep.
But you're still going to pay $10 for the shirt.
Right.
But the extra goes back to you.
Right.
Does that make sense?
Yep, definitely. And so can you now like elaborate on that process of the growth of the cash value and how it actually works and
Yes.
the growth and investment part of the cash value?
Yep. So I'm going to keep it simple. I'm not going to go too deep with variable universal life policies today or index universal life, because that we can talk forever. But I'm going to keep the simple general whole life policy. And based on the insurance company that you go with, they have a guaranteed interest rate inside of that policy. So let's use that $10 example in that T-shirt. Let's say you get the large T-shirt and $3 goes into the savings account. You get guaranteed interest of 1%. The savings account bank you use is the Bank of Rashon. Rashon pays a dividend. And if you don't know what dividends is, go ahead and scroll down on my YouTube. Yo, I got a dividend episode from a conversation with Rashon a couple of weeks ago. Check out the definition of dividends. Rashon pays a dividend out to everybody who pays premiums. So I'm gonna give you 1% on that $3, which is 30 cents, right? And then I'm going to give you another 1% dividend, which is another 30 cents. So now you have $3.60 in your savings account instead of $3. Does that make sense?
Yeah.
It's the same thing with the life insurance policy. The whole life insurance company pays guaranteed interest rate on whatever is in that cash bucket. Mm-hmm. And then they don't have to, but they could pay a dividend as well. Mm-hmm. And they'll pay a dividend based off of the cash that you have in that bucket. And that will add to the additional cash. And that's how it can grow for you over time. Does that make sense?
Yeah, definitely. And so when is it a good time to use the cash value in the policy? Because like I said before, a lot of people are taught that the cash value, you don't get both. Like you don't get the death benefit and the cash value, right? So if cash value is growing
and that all depends. That sounds more like a universal life or a hybrid policy. It may have been the type of product that person was selling or that company sold. But at the end of the day, it's always going to be at a certain point, if the policy is designed right, your premiums will begin to increase your death benefit while also increasing in cash value. And of course, you're going to always get the highest of whichever is the highest, which is typically the death benefit. Unless your policy is designed in a certain way, which that's the case, but that's on a customized basis and that's on a unique basis. But to answer your question in reference to the cash value, the reason why people say, oh, it's a ripoff is because a lot of the fees, the mortality fee, the cost of insurance, the administrative fee is front loaded. So you don't see any real cash growing in the policy until around the 5th year for most companies. So you get a life insurance policy and get all excited because the insurance agent tells you that you can take cash out, and you're like, yo, I put $1,200 in this year, so I should at least be able to get a couple hundred out next year. And you go to get a couple hundred out, and you call the insurance company, and they go, yo, you don't got no money in this policy. And so now you upset. And it's only because of miscommunication. I'm not going to say that the agent did you wrong on purpose or scammed you. It's just miscommunication. The agent didn't fully explain how the policy works. Your cash value is not really going to grow until the 5th year. But I'll tell you one thing, whole life insurance when it comes to cash value building is the long game. But when you look at your 10th and 15th and 20th year of having it and owning it, man, you may be really, really excited. When it comes time to pulling money out to pay for your child's education or to start that business because you retired from your first career or to purchase that second home or to as an additional retirement fund, it's going to be there. But if you're looking for it in the first 5 years, it's not going to be there. And the issue is a lot of us, when we purchase whole life insurance, look for that cash in the first 5 year and it's not there. And then we cancel it. So now we put 5 grand, 6 grand into a policy that we never used. We never got the cash out. And we like, man, this is a scam. It was expensive. I was only covered for 25,000. I didn't get no benefit from it. And the guy told me it was going to be cash in it and it wasn't. How many times have you heard that one, George? Because I've heard it a lot.
Yeah.
Right?
Yeah.
So, hopefully that answers your question.
Yeah. And another part is the main reason why people that you explained to me that aren't benefiting from whole life policy is because they're not overfunding their policies. They're
Yep.
paying the bare minimum on a policy.
They're literally just paying for the cost of insurance. So they're paying for the cost to have the death benefit. And so they're not able to take advantage of any additional features of the policy because there's no money left in the premium after the cost of insurance is paid.
Mm-hmm. Yep. And so
Yeah.
basically what you're saying is that the
Man,
proper way to
go ahead.
whole life policy is to make sure that you're overfunding the policy so that way it's actually growing at an increased rate.
I can't say that publicly on this public forum, but I'm not going to disagree with what you just said. That sounds like a really good strategy. I'm glad you said that, George. But on that note, we're going to get this thing wrapped up. Any words of positive encouragement that you have for the people that's watching right now?
Yeah, I'm all about breaking the cycle of survival within our community. And so for anybody out there, I just want to encourage you that we were not meant to struggle. We were not meant to just work and die. We were not meant to live in poverty. We are meant to be great. We are meant to be wealthy. We are meant to love and to be of service to the people around us. And so if you are in a situation where you are struggling financially, right, it seems like you're in a continual cycle doing the same thing over and over again and not necessarily getting anywhere, I encourage you to take a minute to stop and take these 3 steps, that I talk about in my ebook, which is to acknowledge, where you are.
Where can we
Acknowledge
purchase your
how you
ebook?
got
Where can we purchase your ebook?
survivaltosuccess.org. Yep, you can
Awesome.
go right here and you should be able to get it from there. And so stop, take a minute to acknowledge where you are, how you got to that place, right? And then secondly, take some time to reflect, right? Reflect who you are as a person, and reflect on what made you who you are today. Reflect on the negative habits that you may need to get rid of or the positive habits that you may need to develop, right? And then step 3 is to begin your transformation. Begin breaking that cycle of survival, begin stepping outside of that cycle and really living your life to the fullest, being the person that you want to be, being the change that you wish to see in the world, and living the life that you want to live. And so that's what I always preach to people. We got to break the cycle of survival within our community and really go from surviving to success. You know what I mean? That's where I got the
I
name.
love it. I love it. That was strong words of encouragement by my man George, my homie, my guy. Make sure you go check out his ebook, survivaltosuccess.org. Survivaltosuccess.org. Go grab the ebook and get started on your journey to healing, right? But in the meantime, guys, keep your head up, believe in yourself, and remember, you are only one opportunity away from accomplishing your wildest dreams. Talk to you soon. We'll see you guys online. Bye-bye. And